Here's a little known inheritance tax rule that could save your family tens of thousands of pounds. Now, when it comes to inheritance tax planning, most people wrongly believe that they will owe some inheritance tax when they die. That's not typically the case, and inheritance tax receipts for the entire country have been relatively small in the grand scheme of things over the last couple of decades. It is increasing, largely down to the freeze in inheritance tax threshold, which has been in place since 2009. So that receipt number, the amount of people that have been pulled into this inheritance tax issue, has increased year on year. So the way it works is everybody, you and I, and every individual has what's called a nil rate band. Now, a nil rate band is how much of your estate you can own and pass on tax-free on death. Currently, that's £325,000 per individual. Now, in 2017, the government introduced an additional residence nil rate band. Now, the residence nil rate band is added on to your individual nil rate band. It was introduced at an extra £100,000 per individual, which increased over 3 years to £175,000. So now, if you own property and you intend on passing that down to a direct descendant, you can benefit from the additional residence nil rate band. Adding those two up means that your estate value on death can be up to £500,000 before inheritance tax is incurred. As a married couple, you have something called spousal exemption. And spousal exemption is where if I passed away, my wife could get everything that I owned on my will, on death, and I would use up none of my nil rate band because that would be entirely non-taxable for inheritance tax purposes. That's a spousal exemption. So then on second death, she could benefit from my nil rate band, potentially having then up to £1 million of estate value that she could pass on tax-free. As you can imagine, most people sit underneath that threshold. So if you were concerned about whether you owed inheritance tax, it's possible that you don't. Now, the little known fact around the inheritance tax rate decreasing if you left some of your estate to charity is if you want to give 10% of your estate to charity, then you reduce the inheritance tax rate. Now, the standard rate is 40%, but that can be reduced to 36% if you leave 10% of your estate to charity. Now, for a lot of people, that might not mean anything, but there are plenty of you out there who already intend to give money to charity, but it might encourage you to slightly increase what you're giving so you hit that 10% threshold and then reduce your tax rate for the entirety of your estate, which could mean more money being passed down to your family. So in an example, if on second death a couple had £1 million worth of taxable estate, so that's in excess of their nil rate bands. Now, typically, that would mean £400,000 taxed from that estate, goes straight to HMRC. But if you were to leave £100,000 of that taxable estate to a charity that you cared about, then that would reduce down to £360,000, saving £40,000. Or look at it a different way, redirecting money from HMRC to a charity that you care about instead. So there's a couple of important caveats. This isn't going to work for everybody. Firstly, for most people, inheritance tax won't affect them to begin with. But secondly, for those that do have an inheritance tax issue, they may have different wishes. It depends on who you're leaving your money to. But used effectively, this could be a very powerful piece of planning. Sometimes the best planning isn't about keeping every penny that you can. It's about choosing where it goes. And it's one of the few times where the tax system actually rewards generosity.